Good afternoon, everyone, and thank you for joining us today. Welcome to First Metro Securities 2Q26 Philippine Economic Insights, presented in partnership with the Ateneo Center for Economic Research and Development, or ACERD. For those joining us for the first time, ACERD is an academic think tank based at Ateneo de Manila University that focuses on economic policy, industry trends, and sustainable growth. We are delighted to once again collaborate with ACERD for this timely discussion. My name is Ange Bakay from First Metro Securities Research, and I will be your host for this afternoon's webinar. Whether you're actively investing, managing your portfolio, or simply looking to better understand the economic landscape, today's session is designed to provide valuable insights into the Philippine economy and what lies ahead for the remainder of 2026. To help us navigate these developments, we are honored to be joined by Dr. Luis Dumlao. Dr. Dumlao is a senior fellow of Ateneo Eagle Watch and former dean of the John Gokongwei School of Management. His expertise spans macroeconomics and international financial economics. Before we begin, just a few housekeeping reminders. First, all participants will be on mute throughout the presentation. Second, if you have any questions, please feel free to submit them through the Q&A box at any time during the session. We will address as many questions as we can during the Q&A segment later on. Please note that the views and opinions shared during today's webinar are those of ACERD and the speaker, and do not necessarily reflect those of First Metro Securities or the Metrobank Group. And now, without further ado, it's my pleasure to turn the floor over to Dr. Luis Dumlao.
Hello, good afternoon. Thanks for having me once again. To I'm gonna help here. Gonna need help from Ange here. First, let me turn off my video to save some bandwidth there, and then let me confirm with Ange whether I'm able to successfully share my PowerPoint here. Then
Yeah, all good.
this one's all good, Ange.
Yeah. Mhm.
Okay. So again, once thanks for having me. Those who have had me before are familiar, I guess, with the usual highlights or the components of my presentation. As before, I go with I'll talk about growth. Uh, Growth isn't everything, but without growth, everything is nothing. Quoting from Angela Merkel. Then I'll talk about inflation, quoting from the minimalists because less is more. I'll talk about unemployment, quoting from Pope Francis because causing job losses means causing grave social harm. Then I'll talk about finance, specifically international finance and then public finance, and then about couple of slides about private finance. And you will see here, it's going to be a recurring theme, especially in public finance. In economics, things take longer to happen than you think they will, then they happen faster than you thought they could. Quoting from one of my favorite macroeconomics textbook authors, Rudiger Darnbush. Why growth? Quoting from Angela Merkel, we need three things above all. First, growth, second, growth, and third, growth. Growth isn't everything, that's true, but without growth, everything is nothing. That is to say, without growth, we can either ask those who are miserable to remain miserable, or we can take away from the haves and give it to the have-nots. The only way we can help both is when we have growth. So the growth of the GDP, the last second quarter of GDP was 2.3%, lower than expected, of course. We will look at it, sober ourselves up. How is it from a historical perspective, particularly the last 20 years? And then we look at the business as usual benchmark or base case scenario. What would happen the next few quarters if we don't do things differently? We do things routinely, show up to work as we do, nothing changes, and no shocks. So from a historical perspective, we'd see here that these are the growths. The ones that in blocks are what is referred to as the steady state growths or the natural growths or the full potential growth, the natural growth of the economy. And you'd see here, so every time the solid lines are above, then there is an output gap that this growth goes faster than the usual, whereas when the solid line is below the dotted lines, that means we have a negative output growth. Growth is GDP is growing slower than usual or than natural. So from a historical perspective, we've had some um, temporary spikes during presidential elections. This is the case of the presidential election of President Arroyo. Uh, And then you have the global financial crisis, which is started in the United States. And then you have the election of President Pinoy. Uh, this one would be a recurring theme. This is the all corrupt tightening when President Aquino was elected, suspicious that all the projects that were signed in the previous projects were anomalous. He stopped all the projects and it actually slowed the economy. And then you have the presidential election of President Duterte. Of course, there was the COVID-19, and then the election of President Marcos Jr. And then now, as of now, we have uh, I say deja vu 2011 because that's exactly what happened in 2011. The difference is probably, well, there was an actual and perceived corruption during the previous administration, but this one is many projects stopped because of the corruption scandals that we went through that started last year. And now we have a negative output gap once again. From a average uh, per administration, the average growth during the President Arroyo's was 4.8%. The highest growth during President Aquino Pinoy was 6.2%. Then President Duterte was 3.9%. So far, the present administration, the economy has grown by 5.2% per year on average. This is now the base case scenario, or what is referred to we have as the business cycle of income. So the second quarter, what I have here in blues are the actual growths, and the red ones are the base case scenarios. So we anticipated it, for example, to be 3.2%, and disappointingly, it grew by only 2.3%. So surprisingly low from our end. And what was the reason we missed it? Construction, we anticipated it. So we were already pessimistic about construction, and we anticipated it to contract by 0.9%. It actually contracted by double digits. So a big drop in construction. As far as the whole GDP is concerned, we will have a gradual pickup from 2.3, 3.1 to 4.1% to the end of the year. But on an annual basis, the growth is going to be just 3.1%. The steady state, what I have here is the for each respective industry, sector and subsector, and for the whole economy, the natural growth or equilibrium growth of GDP is 5.7%. So we will miss it. The growth of 3.1% will miss 5.7% by 2.6%, and therefore a negative output gap. And so the government will miss the target. Originally, its target was 2 years ago, 6 to 7. Then it went down to 5.5 to 6.5. And then it's downgraded it to 3.5 to 4.5. So even without downgraded target of 3.5% to 4.5%, it's still going to miss the actual performance. We project it's still going to miss that. The last column for our participants' appreciation is for those who are into long-term planning. whatever specific industries you are, the last column is the number of years each specific industry will double. So for example, the one will grow the fastest is accommodation and food services. So if you are in that industry, the size of that will double in 7 years. For those in long-term planning, if you are in that industry and if you're not able to double within 7 years, that means you are being left behind by your industry. The second fastest one is transport and storage. So we've been doing the online shopping that involves a lot of storage and a lot of transport. So that's been one of the fastest growing. Then you have, of course, finance. Uh, Finance doubling in 10 years. Okay, we said that accommodation will be the one that will double, will be growing the fastest the next few years. So you see here, the blue one is what we have the share in the economy right now, and it will more than double indeed. But in terms of the size, you will see here, so even though this will be growing fastest, wholesale will not as much grow from the blue to red, but you'd see here it would still have the biggest share, followed by manufacturing, followed by finance. Um, the fourth one is agriculture at present. It will grow the fastest. So the next few years, it will be taken over by the likes of construction, professional services, real estate, and so on. So accommodation, transport, and finance will be the fastest, uh, but construction, professional service, and so on will have the biggest share and will take over a bigger share and will take over agriculture. Here's the business cycle of expenditure. Expenditure side. Uh, so again, we anticipated it to be 3.2%, which is already a pessimistic projection, but it grew only by 2.3%, slower than expected. As usual, the problem is we anticipated expenditure in construction to be 3.2%, negative 3.2%. It's actually worse. It became negative 14.8%, and then even worsening on the expected to worsen on the third quarter. Uh, And also, this is an indication the durable equipment is in double-digit construction. So the durable equipment includes tractors, machineries for construction. The fact that this has declined, that means companies have cut down on these, anticipating that they would have less projects to do or less expansion to do in terms of construction the next few months. Um, Looking forward, the growth, it will again slowly pick up to 3.1% and 4.2%. However, on the annual basis, the GDP growth is just going to be 3.1%. Um, so a miss of 2.6%. Okay. A silver lining is that what's here is the net export as a percentage of GDP, that's negative, which means we continue to have a trade deficit. The net primary income from abroad, however, is positive. So this is dollars going out, net export, because of our trade deficit. And this is dollars coming in. Net primary income from abroad is dollars coming in primarily because of remittances. So in absolute values, the net primary income is bigger than, so 14.4% is bigger than in absolute value than 9.1%. So more dollars, more foreign currency will be coming in the the next few months or even the next few quarters and even this year. The doubling is uh, both trade, so doubling in 9 years trade and export. So the economy will continue to open up, whether it be exporting or importing. Uh, So now versus the next 10 years, it's predominantly industry right now, the blue one. In the next 10 years, it's going to more than double. It's even going to be bigger. In terms of components of the expenditure, you see here that exports and imports and exports, as noted, will the ones be growing the fastest. But in terms of size, consumption will not grow as fast, but it would still have the biggest share in the economy. So predominantly consumption-led. Uh, so some good news this last World Bank classification is for the first time since for what uh, about 40 years, we are now in classified as a upper middle income economy. So any economy whose income is $4,636 per year on average, uh, anyone above that is classified as upper middle income. To put us in perspective, of course, Vietnam is just above us, then Indonesia, Thailand, and then Malaysia. So last year we were low middle income and from 1987, but now this is sort of an improvement. So upper middle income in 2025, first time since 1987. I now go to inflation, quoting from the minimalists because less is more. So with inflation of 6.2%, how good or bad is it from a historical perspective? What are the causes? And then looking forward, what are the prospects? So this is inflation historically. We have usually been passive victims of what's happened abroad, and it's usually supply shock driven. For example, this spike here of over 30% inflation in the 1970s was a result of the first oil crisis. This was the second oil crisis, close to between 15 and 20%. Uh, this was the Islamic Revolution in Iran. And then I have this in color blue because this is self-inflicting, not the usual red. This is the debt crisis of the 1980s. And then you have the global recession, and then the invasion of Kuwait by Iraq. Uh, so that also spiked because of the price of oil. And then the Asian financial crisis, and the worst El Nino uh, in recent history, the Iraq War, and then I have the value added tax. Value added tax was first introduced this year, which caused a bit of a spike, contributed to the spike in inflation. The global financial crisis that started in the United States, and then this is the nationalistic insistence that we can be self-reliant on rice, and we discovered the hard way that we cannot be self-reliant on rice during that time just yet. And we actually hurt ourselves, causing so much inflation. And then you have the Ukraine and the global price of rice. And then now we are in the midst of another spike, which is the US-Iran war. Uh, Historically, the averages, we've come a long way from a very bad 16% annual inflation during the Marcos years, and then 12% during the President Corazon Aquino years, around 8% President Ramos, 4.5% President Arroyo, then down to 2.7% President Aquino, and then a slight increase President Duterte and President Marcos Jr. So for every administration, average inflation has decreased except for President Duterte and President Marcos Jr. so far. Inflation per major commodity. So you'd see here It's war-driven. So last year on this year, 0.9% was so much milder than what we have right now is 6.2%. So there has been a spike, but the spike seems to be started going down, albeit very slowly. Because of that, the knowing that the reason is the war in the Middle East, the ones that's affected is transport. Noting the fact that the price of oil had gone up year on year from August at this moment to August of last year from $71 per barrel to around $80 per barrel. And because of that, electricity, gas is also affected. So that spilled over 8%. And because food has to be transported also, the food is also affected. So from a deflation of 0.2%, it's now gone up to 5.2%. So it's now 6.2%. Let me explain why the target is 3%. So my base case scenario is, why is it not 6%? Why is it 6.2%? The actual inflation, not the targeted 3%. Just by actual inflation, you'd see again personal transport inflation of 31%, electricity at 18%, and rice at 17%. We actually had the deflation in meat. Meat has gone down by 5%. So the consumer price index, the basket of goods that measure inflation, is composed of at least 55 items. Each one is weighted more than others. For example, rice is weighted more because rice is more important than others. So in that case, if we consider the weight, so these are the weights um, from the target of 3%, because of rice, inflation had become 4.2%. Because of electricity, it became 5.2. Because of personal transport, it became 6%. And because of the four others, that means transport, uh, food, fish, and vegetables, it became 6.8%. But the contribution of meat is negative 0.5% and milk is negative 0.1%. So 6.8 minus zero point 0.6 is 6.2. And that's why inflation is 6.2%, not the 3% target. The rest of the other commodities in the basket of goods practically even out to 3%. But these are the ones that cause the deviation from the 3%. What I can only say here is when there is an increase in the price of oil, inflation actually increases. And so that matters. So what happens to the global price of oil matters. Uh, so from at this moment to last year, August 11, August 12, August 8 to August 11, prices had gone up from $69 per barrel to $80 per barrel, and thus the increase. It could have been worse because in the beginning of March, April, it went up as close to $150 per barrel. But we're still on the upside in terms of inflation. Looking forward, we look forward, the latest inflation is 6.2%. It will go up a bit. So this one, 6.2% is July. In August, it will go up by 1%, 0.1% to 6.3%, and will settle down so that we expect that the average inflation this year is 5.4%, which will miss, of course, the government target, the central bank target of between 2 to 4%. Mainly due to personal transport and then spilling over to electricity and rice. And then slowing down to 6.2%, and then to from 6.2% slowing down, and average is, well, that's 5.4%. I'll go to unemployment. Quoting from Pope Francis, causing job losses means causing grave social harm. So Philippine unemployment rate rises to 4.9% in June. What is it? In reference to the population and in terms of the head count. We approximate that there are 140,388,000. That's the population of the Philippines. Of that, 2,190,000 are migrant workers, so we cannot make them part of the labor force within the Philippines. So that leaves us with 112,109,000. Of those, 30,321 are younger than 15 years old. So we cannot make them part of the labor force. They're young people, so they're not counted. That leaves us with about 81,788,000 that are at least 15 years old. Of those, uh, only that's the 65.1% labor force participation rate. 53,246,000 are in the labor market. The rest, the non-participants, are 28,542,000. These are, for example, college students. So they are above 18 years old, studying full-time, not looking for a job. So they cannot be neither employed or unemployed. They cannot be part of the labor market. You also have the retirees, of course. So they're not in the labor market. And then there are those that are just do not want to work. Okay. So of those, the 53,246, that's where we will get the unemployment rate of 4.9%. So in that case, the unemployment rate of 4.9%, that's equivalent to 2,588,000. That leaves us with employment rate of 95.1% or 50,658,000. Among all those employed, some of them are fully employed. Okay. But by the way, just the thought experiment. If the labor force participation rate is to increase to 66.1%, unemployment rate would be 6.3%, not 4.9%. But in any case, of these people, some of them are part-time workers and do not make enough money, or some of them work more than 8 hours. The poor, hardworking vendors that do not make enough money, they are called underemployed, and that's the 12.1%, and there's 6,155,000 of them. So for a lack of technical term, the fully employed full-time worker making enough, technically making enough, is 44,544,000. In terms of the rates, let me go again. In terms of rates, so unemployment rate increased by 1.2% from 3.7% to 4.9%. In terms of official underemployment data, uh, it increased from 11.4% to 12.1% by 0.7%. In headcounts, what I have here is in headcounts. At net, 822,000 entered the labor force, new graduates, new participants. 184,000 of them were hired, and 639,000 of them are still looking for a job and cannot find job. The underemployed is 352,000. That means, technically speaking, at net, all these 184,000 jobs that were created were low quality jobs. They fall under underemployment. And then, uh, so 184,000 new jobs are low quality jobs, and 168,000 jobs were downgraded from fully employed to underemployed. In terms of sectoral and subsectoral, the main sectors, of course, are agriculture, industry, and services. Uh, they produced 184,000 jobs, primarily coming from the service sector. producing 743,000 jobs. The biggest employers are wholesale and trade, agriculture, and construction. They lost 1,014,000 jobs. The biggest winners are accommodation and food services, administrative and food service activity and support services, so your back office activities, public administration. They produced 1,377,000 jobs. All of them over about 450,000 jobs each. The biggest losers are wholesale and trade, fishing, and financial and insurance. They lost 1,565,000 jobs. I'll go here because I've been asked about the minimum wage. What could be the effect of the minimum wage on inflation? Or at least that you'd see here. What I have here is the blue bars. The blue bars is the share of employment in the country, and you'd see here that the biggest employer is Calabarzon, more than 15%. The second biggest employer is NCR. The third biggest employer is Central Luzon. Why it might not cause in the increase in minimum wage might not cause so much inflation is that you would see here is that the increase in minimum wage is only in NCR, and NCR is only second to Calabarzon, and if we add the others, they are still there's no sign there's no at least there's no announcement yet of increase in minimum wages. uh, the ones in orange are in their actual minimum wages. So if we push through with the increase in minimum wage, that will either increase the consensual non-compliance of workers and employees. That means they'll agree to receive and pay less than the minimum wage and still work, therefore non-compliant. Or uh, or you'd see here the biggest employers are around about the corner and they make so much. So here we have 700 going 785. So in the case of Parañaque, 785, just moving 50 meters somewhere in Cavite to the borderline, they already have to pay only 600. Or somewhere in Muntinlupa, moving to Cavite to Laguna, from 780 paying 600. Pasig to Taytay, Cainta, it's the same story. Marikina to San Mateo, Valenzuela to Caloocan to Bulacan. So it's either going to be an increase of non-compliance or it's going to be a matter of many companies transferring a few meters away from and paying from 780 to 600 to neighboring regions. And you would see also that NCR is only a small part of everything else in relation to the rest of the country. So NCR is just less than 12%. The rest is 88%. I'll go now to finance. The time to repair the roof is when the sun is shining. I'll explain to you why I quoted that. I'll go first with international finance. Uh, the latest one I looked at was that was August 11, 2 days ago. The exchange rate was 61 pesos and 21 centavos per dollar. And with the euro, Japanese yen, and the British pound sterling, and so on and so forth. Though depending on the theory, you'd see here among the theory, the worst case scenario is the peso depreciating to 62 pesos and 81 cents. Uh, so that's and then the the least ones is only by 60 centavos from 61.2 to 61.80. Uh, but however, whatever the fluctuation is, we are confident that it will fall within 95% confidence. It will fall only within 58 pesos per dollar and 64 pesos per dollar. So 64 pesos per dollar is the extreme case, and 58 is the extreme low case. Uh, so there's uh, there is pressure for the peso to depreciate, albeit uh, by modest amounts. Then you have the gross international reserve, how much reserve that we have uh, in terms of the dollar. What I have here in solid lines is the what is referred to as the import cover, or the equivalent number of months of import is our reserve. So for example, here, if it's 5.9, that means our reserve is equivalent to 5.9 months of import. Um, the standard or the benchmark standard is a healthy uh, import cover is the threshold is 6 months. So this is not so good. But after that, uh, this is the global financial crisis. It went down to 6.6 months. So that's okay. And then because of the lockdowns, we had a record import cover of more than reserve equivalent to more than 1 year. Right now, the latest one is we have a reserve of $103 billion, and it's equivalent to 6.7 months worth of import. The foreign office OFW remittance will continue to increase. So the red ones is still positive, although it is slowing down. Still, we anticipate more dollars to come in than go out because of uh, primarily because of the remote intelligence using AI, the content creating, programming, animation, cottage service industry, basically the remote office assistance that Filipinos provide abroad, and that's one of the main sources of dollars coming in, and they all file what is referred to as the W-8 in the United States and in other countries. I now go to public finance. Public finance, every time the public finance is above the line, that means we have ourselves a budget surplus. Anytime below, that means we have a budget deficit. Our government spends more than it collects. So practically, it is a history of budget deficits. But then again, just because we have a budget deficit means that's bad. Uh, the benchmark, mass security, healthy benchmark is as long as the deficit is less than 3%, we're okay. So we are okay in some years, we are not on some others. Okay. Here, these are not good years during President Estrada and President Arroyo. And then you have some good years in terms of deficit spending during President Aquino, and then this one spiked. Uh, but this one is explicable because of the pandemic, and that's okay. We have continued to decrease it with the present administration, but it is still above the 3%, so it's still not a healthy trade deficit. Still, the average around the world sorry, not around the world, but emerging market developing economies is 5.5%, which is at par with our present deficit. Our growth is steady state growth is 5.7%, so our growth is barely outgrowing the debt. So why would HUD be in the deficit? Um, so now I will say this is now the time, quoting from John Kennedy, the time to fix the roof is when the sun is shining. So the red here is the expenditure as a percentage of GDP, and the blue is the revenue as a percentage of GDP. And then, true enough, historically, the red has been above the blue. So we have had deficits, but usually below 3%. What happened after the COVID is the expenditure spiked up, and that's explicable, that's understandable. It was the right thing to do because we have to save people's suffering during the pandemic. So it went up, okay? Technically, we would like, well, we could use generally speaking, pandemic ended in 2022. And so this should have stopped. This should corrected. But what happened after 2022 was, well, the sun was shining, there was no pandemic, and it was time to fix the roof. But it did not go down to its previous expenditure. It would stay up. And now, as just as we want to fix it, there is now war, and now the rain started pouring again. So here, the sun was shining. It was time to fix the roof. We did not fix it. And now it is raining once again, and it now becomes more difficult to fix it because of the suffering of people uh, with prices going up because of the war. And so what's happened with the public finance is that as debt grew by 8.2 from spanning three administrations, grew the debt growing to 8.2 trillion. But what's happened is that the debt as percentage of GDP had gone down from 87% to 42%. In other words, we did not eliminate the debt. In fact, we actually increased the debt during those years. We did not adopt austerity, but actually what we did is we borrowed and invested, and we were able to outgrow the debt. After the pandemic, now the debt is now, so from what's this? This is now 8 trillion, is now 19.1 trillion pesos, and it's now equivalent to 66% of GDP. Just to give us perspective, uh, a GDP above 60%, a healthy debt to GDP ratio threshold is 60%. Anything above that, you would be on the watch list. Another number to look out is 90%. We are still below that. It is referred to as the Reinhardt-Rugoff threshold. Anything above that, and usually the economy started going very, very slow down. The global debt to GDP ratio is about 100%, and our 66% is still less than that 100%. But it's still not to say it's healthy. So this time, this is not sustainable. And why is there no crisis? I'll just quoting in the beginning, Rudiger Dornbusch. In economics, things take longer to happen than you think they will, and then they happen faster than you thought they could. This is not sustainable. We can get into trouble into this. When trouble comes, they usually come longer than we expect. But when they come, usually it's too late. I'll go to private finance briefly. So these are the performances uh, of these respective countries. I'll leave the rest of the conversation with other events with our colleagues with First Metro because they know more than that than I do. I've been asked about public debt. Public debt has been its record high consumer public debt, 3.7 trillion pesos. But then again, this 3.7 trillion pesos as a percentage of GDP is about 13% only. It is nothing compared to other countries. Countries like in the US, more than 100%. Uh, I'll close out just to, just to give some interest, some nuance to what's happening that people might not be aware of. The last, uh, so the total fertility rate now is 1.7, and the replacement rate is 2.1. That means if the average woman in a country has 2.1 children in her lifetime, that would be just enough to replace the population. That would be just enough to have zero population growth. But now we are now below 1.7%. Another one to look at is the last time I presented this is that the urban sector is below replacement rate, and the poor ones in the rural sector was still above replacement rate. But now the latest data says even the rural sector is below replacement rate. So one first inevitability is that population growth will soon be negative, matter of time. The second inevitability would be the economy will grow slower. Yes, the economy will grow slower, but the average income, the average person will be better off. And then both rural and urban sector are both now in the below replacement rate. So what does that mean? Market implications. So generally, the population would be going for quality, not quantity, as the years progress. And the problem also with that is that a lot of times it is the educated ones that are not having children, and the ones that we see in the streets, the ones that are the street dwellers, unfortunately, the less educated are the ones that are having children. And that's important implication to focus on these in terms of policy. So the poor are having more children than the not as poor. And true enough, this is the one of the slowest the biggest drop in population growth in Asia. So 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 now it used to be 3% per year. It's now got down to 0.8% population growth per year. So as a wrap up, let me close it down. So annual growth will be 3.5%. It will be a negative output gap of 2.6% from the steady state of 5.6%. The average annual inflation will be 5.4%, which is above the 2.4% target range and can get worse if things go worse in the Middle East. And everything is also unpredictable there right now. Unemployment has gotten a bit worse, but it's still okay. It's comparable to OECD rates and it is still at full employment. International finance, there is cautious pressure for the peso to depreciate, but not so much of a worry because still more dollars and more foreign currency is coming in than going out. In public finance, uh, it's not sustainable, but what the only thing I can say is following uh, rephrasing Rudiger Dornbusch, crises come longer than we expect, but when they come faster than we can dodge them. So I close that. Thank you for the opportunity to share the afternoon with you. I suppose I'll take questions.
Yeah, thank you very much, Dr. Dumlao, for that comprehensive presentation. While we gather more questions from our audience, let's take a brief moment before we begin the Q&A segment. For those who haven't submitted their questions yet, please feel free to send them through the Q&A box and we'll do our best to address as many as possible. We would also love to hear your feedback to help us improve our future webinars and events. We'd greatly appreciate if you could take a couple of minutes to complete our feedback form by scanning the QR code displayed on your screen. All right, I'm already seeing a couple of questions coming in, so yeah, let's get started. All right, for the first question here, Dr. Blau, will there still be a reality wherein our economy will grow and realistically meet its target? Will it be 10 to 30 or even 50 years? Can you provide some insights regarding where our economy will go?
This year we will not reach the 5 to 6% the growth. It will start to pick up, uh, but if the normal is 5.7% growth per year, it will take probably the soonest one is next second quarter of next year.
All right. Also, couple of questions regarding Paxilica. It's a hot topic right now.
Mhm,
And a lot of our audience are asking about its economic impact, contribution to GDP, your expectations, or maybe your
mhm.
take in general regarding Paxilica.
Okay, first it's like I remember when the NAFTA was first introduced, the North American Free Trade Agreement. Basically, everyone was it's a big thing, but in the beginning, it's not the beginning. In the starting point, it will not be the end of the world or the beginning of a new world. It will be very slow, and then when it comes in, it will definitely create jobs, and it will have a positive impact for us. So this is a one of those friend-shoring initiatives of our allies, the like-minded countries, the democratic countries. Uh, in the end, it will have an effect, positive effect, especially in terms of employment. The question is how big is the positive effect, and that would depend on us on our negotiating, uh, 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 how successfully we negotiate. Because if it is just build and then ship, that means there will be jobs on building, but once you ship it, there will be no more integration. There's not going to be a vertical integration or a horizontal integration. But if we negotiate such that it comes in, build, and then build on another stage within this country, and then build another stage within this country, that would create a vertical integration. And then if you make a community out of those companies, that means the horizontal integration means for example, restaurants surrounding the factories, that's the horizontal integration. And that's how we make the most out of it. So definitely it's a positive because there will be a first stage of build, but how we create the horizontal integration or vertical integration, that is the one that will depend on us how well we are able to negotiate successfully that we create those integrations.
Yep. Right. As a follow-up to that as well, our critical minerals like nickel and copper will have a big impact related to still on the pack silica development.
Mm. Yeah, okay, the the anti-mining part of it is that they get the nickel and then they ship it out. That means it's environmental degradation. You hire people, there's a cost into it, and then it's shipped out. In other countries, and this is not new. This happened in Germany 200 years ago. When they were rich in minerals, what they did was they mined within their countries and they constructed the guns, the cars within their countries. There was vertical integration. So I'm not anti-mining per se. I'm probably anti-mining if you mine it here and then you ship it out. But if there is a promise that you mine it here and what you mine, you construct something bigger out of it, and then even make a car out of it within this country, then that's good. Then that means the positive will outweigh the negatives. And that's also the Japanese model. You can mine it within there on the condition that there is a promise, there's a commitment, the construction, that the vertical integration will be within that country.
Yeah, it's an interesting take on the metal side of things in
Mhm.
terms of pack silica. Another follow-up question: how will the pack silica affect the inflation rate since it will require more electricity and water, raising demand on these resources?
Well, it will increase the demand on these resources, but it's a challenge for us to increase the supply. So the fact there's a saying, there's a says law that the supply creates its own demand. In this case, if the US companies, the Japanese comes here, then there is a demand. And this is a case where if we do it right, strategically well, the demand will create its own supply.
I'm not sure if Doc Dumlao, are you still there?
Oh,
Just
yeah.
sorry, you
I think
froze
you're
for a
the yeah.
second there.
So again, there's a saying, it's a says law that the supply creates its own demand, but this is the case where the demand would create its own supply. The fact that these companies will be coming here signals that there will be a demand for additional electricity, and that is the one that will trigger the construction of or uh, the improvement or the increased capacity of the production of electricity.
Right. Thank you for the clarification. Now, shifting on a different topic. So one of our audience is asking about, do you think BSP will continue their rate hikes in the near term, or what's it gonna look like?
Uh, the governor has signaled that because of the slowing growth, that they are less inclined to increase the policy rates. I heard some worse. They said it can go up to 5.25% from 4.75%. But definitely they're not as hawkish as before. Uh, Sometimes uh, I must confess that ask these questions, the answer to that is reading what they're into thinking rather than reading what I think is the right thing to do. Reading into what they think they will do because of their ideological or inclination, uh, they would s- they would probably still increase it, but they are less inclined to do it. But for me, if you ask me what's the right thing to do, the right thing to do is stop. Don't do it anymore.
I see. Next question that we have here is on inflation again. So do
Mhm.
you have any idea of how much impact to inflation is for every 50 cents peso depreciation?
Every 50 cents depreciation. It's more like it's the oil that causes the depreciation. Basically, it's not the it's not the peso depreciation. It's actually the price of oil. So historic historically, let me see. So I'm okay. See my screen with the dotted lines.
Mhm.
This one with the dotted lines. Do you see it, Ange?
Yes, it's
So
visible.
historically, a 100% increase in oil results to an additional 1.5% increase in inflation. Okay. The effect on depreciation is just coincidental. So if the price increases by 100%, whatever the price, whatever the price of the peso depreciation, that's coincidental. Eventually, it falls down to inflation. So in the end, it's the price of oil that causes inflation. So for example, what happened during that time in the worst case scenario during March, April was oil went up to $150. That's more than 100% increase in the price of oil. And true enough, inflation went up by more than from 1% to 4%. And then everything else follows up with the pass through it on electricity and so on. What happens to the depreciation? It's it's like A causes B and C, but the B and C don't cause each other. It is the A that causes the B, it is A that causes the C. Whatever happens to B and C is just coincidental. And that's why I cannot say. So the answer is the question is what's the effect of B and C? And the answer is it's coincidental because it is the A that causes the B, it is the A that causes the C. B and C. So maybe that's not hopefully that's not academic enough, but that's what happens.
Yeah, and Doc, you already touched up on the oil prices.
On what?
And on the oil prices,
Yes.
and that of course is affected by the current tensions happening in the Middle East, which has already been going for I think 4 or 5 months already. So
Mhm.
one of our audience here is asking, can you share some economic impact to the Philippines because of the Middle East tension?
Well, definitely now it's the inflation. Everything is it started with the uh it's actually there are two transports, right? There are two transport. It's transport of goods and services and personal transport. The transport of goods and services, and that's not much affected so far because there had been subsidy and the government has frozen it. The one that's spiking is the personal transport, which translates to how do most people get to work? Not here. Most people do their public utility vehicles. That's frozen. Government froze that, and then there's targeted ayuda to that. The ones that's affected are the one who goes to work via car. That's personal transport because they pay gasoline for themselves. That's the one that's spiking right now. That's the one that's more than 20% increase in inflation. And then it passed over to electricity, and then it passed over to food. So those are the ones that's affecting generally it's inflation. Yes.
Yeah, got that. Okay, for next question here, how is Philippines at par with regional peers in terms of debt to GDP?
In debt to GDP, it's in terms of the world, we are at par only because the world is doing so bad. Okay. Uh, but right now, it's mixed. If it's and it's very difficult because, for example, our debt to GDP ratio, in terms of just debt, we are Japan is worse than us in terms of debt. But the problem is Japan is a net lender. Japan has a bigger debt than ours, except Japan also has a bigger uh they're lending more others. They're net lenders. They lend more than they borrow. That's the thing. For us, we borrow less than Japan, but how much do we lend? And we don't lend as much. So it depends. So I mean, we're uh, Singapore, where in terms of debt, Singapore also has a big but in term compared to, let's say, Thailand and Malaysia, we're not that good. And we're not in a healthy position right now.
All right, got that. Next question here. Does the increase in construction sector directly affecting the growth in the agriculture sector? Is there a specific segment, maybe coconut, banana, poultry, or something else in the agriculture sector that is at high risk?
You're saying the growth in construction?
Yes.
The construction acts is actually declining. That's the thing. So uh, actually, construction is the main culprit why our economy is slowing down. So it's actually a contraction of 13%. And then even so, construction of 13%, double digit to the third quarter. But agriculture is growing slowly, 2.3, 2.7%, but it is growing better than its potential because the past few years, its average is its natural growth is 1.1%. And yet it's growing by 2.3%. In other words, agriculture is uh, overperforming its natural growth. Construction is underperforming. So so the link is not that it's not really that strong between the two.
All right. Next question here, sir. With a declining fertility rate, which
Mm.
sector will be most affected, and will the government have any action or policy taken to address this?
So the fertility rate is declining. Uh, it's a natural progression that the fact that people are becoming more educated, male and female. So it's a natural progression. Uh, so eventually we will have so the economy will grow slower, but then the average person will be better off. In terms of the market, what that means is the fact that people are now going for quality rather than quantity. So I'm not saying it would happen overnight, but in the long run, so for example, between fast food and uh, high-end products, we are moving very slowly, not overnight, okay? It will move slowly to more high-end to less quantity cheap products, generally speaking, but it's not the thing that you do overnight. It will take long time. It will probably about 10 years, but it would be a slow progression towards that. Whether the government should do anything about that, I'm not sure. It's uh, because after all, the average person will be better off. What the government can do about it is start planning, because what that means is, uh, and we have time, probably in 30 years, the population of, so we have dependents right now, the population of dependent young people is greater than the population of dependent senior citizens. But in 20, 30 years the time, that will switch from less young dependents to more senior dependents, which the workforce will have to take care of.
All right, thank you for that. So another question here, someone's asking about your views about the impact of public infrastructure spending in the last few years of the current administration.
I'm sorry, can you
So it's about someone's asking about the impact of public infrastructure spending in these last few years of the current
it's
administration.
so it's started slowing down after the scandal. So, and that also almost coincides with the start of the slowdown of the economy. So, do I still have it in the graph? Yes, the scandal and then the construction, it started in the second quarter of 2025, and so that was around 5% growth, and now it's down to 2.8% growth. And a lot of them is the cease of the projects, and then in the and then the spillover of the lack of confidence in the private sector, cutting their construction expenditure and consumption.
All right. Thank you for that. And another question here. What is the potential economic impact of the Super El Nino? What will or how will this impact our country in terms of the economic landscape? And do you think this will slow down GDP growth even more?
It will. It will definitely slow down, specifically in the agricultural sector. The ones that will be mainly affected is, just to give us an idea, how which ones will be affected. So, so if this is the agricultural sector, and this is the one that will be affected the most. Fortunately, it is the smallest that will be affected the most, but unfortunately, it will be the poorest that will be affected the most also. And then it will spill over with the cost of food in inflation also.
Got that. Moving on to the next question. Going back to the topic of construction.
Mhm.
So The negative growth of construction is because it grew so much the past years and before the pandemic. Is Sorry, let me read that again. The question is asking about if the negative growth in construction is because of its fast growth in the past few years and even before the pandemic. So there's an influx of properties now across sectors. With a lower base this year, do we expect it to grow next year? Especially since it is election already and the return of Pogo might happen.
Okay. Uh, the 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 stoppage of the Pogos actually stopped the construction, but it also stopped the bubble from bursting. It was a bubble that's starting, and that was a bubble that was ignited by partly, mostly, in big part by the Pogo. If we had let the Pogo stay, the bubble would continue to go up and up and up, and the higher it goes up, when it bursts, the worse it was going to be. What we did when we stopped the Pogo was, just as the bubble was started to go up, we popped it right there, and it actually avoided something bigger, a bigger problem. Okay. If it's just the base no, but if I read it correctly, I'm being asked if the big contraction in construction is a base effect. Uh, it's partly a base effect. It's a combination of a base effect, but it's also an actual contraction because of the two things of the government stoppage of many contracts, okay, construction programs, and the lack of confidence from the private sector of all the things because of the corruption scandals.
All right. I think we're down to the last few questions
Mhm.
here. Doc, is retail consumer confidence expected to improve this second half of the year?
It will continue. Again, from this same screen, the steady state, the natural growth of consumption is 5.3% per year. And what we project the next two quarters is 2.7%, 2.2%. So it will continue to be a drag. It will perform slower than the usual compared to, the past few years.
All right. Another question here. Other than AI, what emerging markets is Philippines more likely to enter in the near future?
It's the so studies have indicate that AI would have a positive effect on the growth. AI meaning, for example, from AI is across the board. It does not discriminate between uh, uh, the low value chain to the upper chain, or educated or uneducated. Across the board, the productivity is going to increase. For example, I'm gonna give you an example. Uh, an, ec- an, an electrician of a specific brand X, is specialized on brand X, fixing that brand X. But with AI, that same electrician will have just to go to the application, read it, and be able to use to be able to fix whatever, or what do you call that, in troubleshoot the problem in product X, product Y, product Z, and so on and so forth, thus improving the productivity of that person. Same goes with the executives, those writing reports. That means from initially writing, they can go to the AIs, start it. The AI will not run them, but they will use the AI as a starting point. And just like any technology, every new technology creates a new technology. Uh, So the effect with it is so far in what I'm seeing in literature is it's going to be an improvement across the board in productivity. Uh, it will not change the world, but it will actually improve us across the board, across uh, the corporate ladder.
Right. And for our last question this afternoon, Doc, despite the softer GDP outlook, which sector of the Philippine economy offers stronger growth opportunities moving forward?
Mm. Uh, First of all, it's trade, whether import or export. So we'll continue to open up the economy. Uh, in terms of the services, it's actually uh, again accommodation, and then transport and storage. When I say transport and storage, uh, it should be storage and transport actually, because the storage is when they store the products, okay, and then you go online. So you go online, and then you order. I don't want to advertise. Whatever your app is, you order, and then they transport it. That's transport and storage. And then it becomes bigger. It becomes bigger. Uh, I have my own anecdote. I suppose many of you here in the audience, you yourself, Ange, you have your own anecdote. I suspect you've been buying many things online, and they had been transported, and they had been stored somewhere else close to you. So that's one is that's the and that one primarily, and even food and everything, and that will double in 8 years.
All right. Thank you for that, Doc Dumlao. And with that, we have come to the end of today's session. On behalf of First Metro Securities, I would like to extend our sincere appreciation to Dr. Luis Dumlao for generously sharing his expertise and helping us gain a deeper understanding of the Philippine economic outlook. We would also like to thank all of our clients, partners, and participants for joining us today and for contributing to such an engaging discussion. We hope this webinar has provided you with valuable perspective and greater confidence as you navigate your investment decision in the months ahead. As a final reminder, the views and opinions expressed during today's webinar are those of ACERD and the speaker and do not necessarily represent those of First Metro Securities or the Metrobank Group. Before you leave, we'd greatly appreciate your feedback. Please take a moment to scan the QR code on your screen and complete our short survey. Your comments help us continue improving and delivering content that matters to you. This special briefing with ACERD was proudly brought to you by First Metro Securities. Again, I'm Ange Bakay, and it has been a pleasure hosting you this afternoon. Thank you once again, everyone, and happy Friday.
Trading on the go? Here's First MetroSec Go for you. Easily open your account today with this app. You can download the First MetroSec Go app through Play Store or App Store for free. If you already have it on your device, simply open the app and click Sign Up Now. Next, you need to create a user ID, read and agree to the terms, and provide these information. Once you're done, click the link on the email verification sent. Now, let's complete your account application. First, input your account information. Then, provide your user information. Next, accomplish the investor profile form. Almost there! Read and agree to the terms and conditions. Then click Agree. You will then receive your reference number through the app. Don't forget to save this number because you will need it for your initial deposit. Next, upload or take a photo of these requirements. 1 valid ID, 3 signatures on a piece of white paper, proof of address, and proof of bank account. If you're self-employed, there are additional requirements. Now let's fund your account. You can make your initial deposit through bills payment, online fund transfer, over-the-counter deposit, or remittance. Next, you will need to verify your identity. Simply take a photo of your ID and take a selfie. You're all set. An email confirmation will be sent to you in 2 to 3 business days. Happy trading! For more information, visit our help center at help.firstmetrosec.com.ph. With First Metrosec, it's your future first.